Welcome back to DC Wealth Builders. Today's episode is for my high performers. Whether you're a top producer, a closer, a deal maker, really anyone who's quietly asking or questioning, I'm making good money, so why does it feel like I'm not building wealth? And here's the reality. A lot of entrepreneurs, especially our top performing agents, they are actually generating a strong, what we call GCI. This is the gross commission income, the revenue, right? They're actually closing deals and they're getting checks, right? They have income coming in. And that strong GCI, 6 figures, multiple 6 figures, some even 7. But very few are building a meaningful net worth. And why is that? That's because income is not wealth. And GCI, that income, is not equity. So you can be a top producer in the real estate world, commercial world, and still not have financial freedom. So I'm gonna ask you a challenging question. It might be a little bit uncomfortable. If you stopped the production you're doing today, you stopped selling homes, you stopped working, you stopped doing, would your lifestyle continue comfortably? It'd be fine. If I said, here's a check, go off to Hawaii, take your whole family, you can go for 12 months. The only catch is you cannot touch your business while you're gone. When you come back, are you continuing life comfortably? Everything's fine. Do you have to make some major expenses? Or do you have a big problem? No judgment. I ask that question just for awareness and for a level set. Because if your production stops and everything else in your world stops, then you don't have real wealth. And a lot of us end up in what I like to call the income trap. Think about this as a linear model that most agents in particular, right, if you're in the real estate space, live in. That means you get a transaction, right? So you meet somebody, they're ready to buy or sell a house. That transaction closes and you receive a commission. And what happens? Sometimes that money's already spent. Sometimes it creates a lifestyle upgrade, a new car, a bigger house, more pressure, higher income, higher stress. And guess what? You got to get back in the wheel and do it again. You got to get another transaction. I can't tell you how many times I hear agents say, I want this thing, I just need to sell 2 more houses to get it, right? They convert the lifestyle change they need to the house that they're gonna have to buy to get it. And the core shift, right, that has to change in order for that to shift is understanding that a transaction creates cash. It's actually ownership, equity, that creates wealth. And that's the fundamental difference. Transactions create cash, production creates cash. Ownership, equity, that's what creates wealth. So today is not about making more money. I'm not gonna tell you how to do more leads. I'm not gonna tell you how to sell 5 more houses today. I'm gonna talk to you about how to convert that cash into wealth. And guess what? It's actually not about necessarily, depending on your production, for a top producer, it's not necessarily about doing more. We're gonna turn commissions into equity, transactions into assets, and make all that effort into your increased net worth. And that's the real game. That's the real game we're playing. If you don't imagine a world where you're out selling real estate in another 5, 10, 15 years, then this is the strategy that you're gonna be able to implement to make a real change and impact your net worth. This became really real for me as an agent, right? I had an opportunity to sell hundreds of homes in the DC metro area. And what I found was that I was working with a lot of investors. And so I would find an incredible deal, right? I was in Brookland, Northeast DC, find a great deal, call up one of my investors and say, I got this amazing deal for you. And what you might not know is in the investor world, if the agent brings the deal, a lot of times the big win is that the agent then gets to list the deal on the backside, right? So you bring them a transaction, they do it, they get this acquisition, they make the renovation, they improve the property, they move it from being a $500,000 acquisition to now a $1.5 million fully renovated, ready to go home on the market. And as the listing agent, right now I get to sell it. And that's pretty incredible. And I remember this opportunity, I had found this deal, I'd met with this woman, we'd done all these things, it was a great property, my investor bought it, and then I'm bringing this beautiful property back to market. And when we sit down at the settlement table, I looked at the number, his net, as a result of that transaction. And I looked at mine. Now, granted, he took the risk, right? He did the work. He had to hold the property and to figure out the financing. He made the investment. But what I realized is that the real income, the real opportunity for that to become income converted into wealth was happening at a side of the table that I was not even participating in. And so the opportunity for an agent to move from just the transactional nature of transacting, helping somebody identify and sell a property, to actually moving in to the ownership position. And so what we've created here is what we call our wealth conversion flywheel. So I want you to picture this. Think about a wheel, right? And we'll talk more about what a flywheel is, but think about a wheel. It's not a straight line like our income trap. This is a wheel. And at the center of the wheel is production. And when you create production, that creates cash. It's the ownership that creates wealth. And around it, there are the 6 steps, right? So the transactions are your GCI. Net income is when you get that GCI, that income, it's what you actually keep. Capital allocation, what is that, right? Sounds fancier than it really is. This really just means where the cash you keep is now gonna go. And this is your decision point. You can move that into asset acquisition, or at least the equity that's gonna be for a future purchase. And when that happens, that differentiation that you move in that capital allocation, that you put some of the cash to the side for future equity, that equity then becomes the investment. And that investment creates appreciation and it creates wealth. And that is the cycle that you're then gonna repeat. So remember in our income, right, trap, we were making the income and we were spending it. It was great. The difference in our wheel is that we're actually gonna win the money, win the net, when the cash comes in. We're gonna have some of it go towards our lifestyle, some of it go to our expenses, our debt, and some of it actually be allocated for our investments, because that's where the real wealth happens. And when this spins and when it's going, that's the flywheel, right? When it spins, it starts to compound. And when it compounds, that's where you start to actually move the needle in your net worth. And most agents, they never get past step 3. They actually never get past the place where they just got excited and they did like I did, and they call the investor and they say, I've got an amazing deal for you. And the cash that comes as a result of that transaction just goes right back in 100% to the lifestyle bucket. So that's when lifestyle wins. So that all sounds great, but let's make it practical. I want to give you 3 tactical ways that you're going to build this wealth. Number 1, the obvious one, own real estate. I know it's obvious, but it's not that common. More than half of real estate agents don't own anything beyond their own primary residence. So while it's obvious and while we're transacting it all over the place, we don't actually own it. And so you want to ask yourself, how many doors do I own, right? How many doors? Is that a 2-unit, a 4-unit, a long-term rental? How are you adding to your portfolio? And when you understand the market, you know the market. You know what's available, you know where the opportunities are. And once you've got those assets, you can add value through refinancing, you can expand into multifamily, you can partner on deals. If you're not ready, capital's tight, or you're not ready for all the construction, look for partnership opportunities. Your commissions are powerful, but only if they're leveraged for the asset acquisition. You want to be leveraging those for assets. So let's talk about the math. You can always have a math segment in each of our episodes. So if you generated $500,000 in GCI, that's a lot, right? $500,000 in GCI, you sold 20, 30 houses. After splits and expenses, you're netting around $250,000. This is annually. So if you invested $75,000 per year into appreciating assets, and you did that consistently, you are looking at $1 million plus in equity. Does that make sense, right? So you take 10 years, you're consistently investing, because if you're investing that $75,000, that's actually going to be 20% if you're investing at a rate with a debt of 20% of what's required for you to bring to the table. So you're gonna then get an asset that's actually that much more, right? So that 80% plus your initial 20% down payment, you're gonna gain appreciation on the whole thing. This is no increase to your production, no extra hustle. This is the structure that wins because you're starting to diversify. Even if you just held that position and you said, I'm gonna consistently sell 25 houses, 2 houses a month, that's what I'm consistently gonna sell. And you then allocate capital allocation, which we're gonna talk more about, that in the place that allows you to own real estate. So number 1, it's not a hustle, focus on a structure, own real estate. Next up, let's build an equity engine. I love this one. Let's go bigger. Production creates income, ownership creates wealth. So ask yourself, do I own part of what I'm building? So equity engines could be business ownership, team profit structures, participation in development projects, angel investing, profit share models that really allow you to participate fully in businesses and properties that you're building, that you're part of. So when you build a team, do you own part of the margin, right? When you're building it out, when you scale, do you own the system? If you're creating value, don't you own equity in the vehicle, or be asking that question? If not, you're building someone else's wealth. And that's a hard truth, but that's what you want to be asking. Where are the opportunities to actually invest and have an equity position, which means you have a different outcome on the upside? That's an empowering one. It puts you more in the driver's seat because you have the opportunity to change and impact what's happening in a project. Number 3, this one sounds fancy, but I promise it's not. Be a master of capital allocation. And this is what doesn't get talked about enough. So when a deal happens, you close a transaction, what happens with the money that comes in? Usually, I mean, let's be honest, sometimes that money's already spent. It's already got to go to certain things. But when you get on top of it, that's not what we want to have happening. So money comes in. Where do you have expenses? Where do you have debt obligations that have to have a certain amount of it allocated to that? And where do you have dollars that are going to go towards your investments? This is what you want to be focusing on. And ideally, it's automatic because assets cannot be an afterthought. That means you know in your world, 60% of what comes in is going to go to my lifestyle. 20% is going to go to my expenses, and 20% is going to go towards the investment. Now, the reality in our business, depending on how you have it structured, that might have to be a little bit more depending on what some of your tax obligations. If you think about the debt, if you think about LID, right, lifestyle, investments, debt, we got to be thoughtful about the debt. What are the things that when we generate income that are going to create additional expenses? But the goal here is to actually have a plan around it. That's capital allocation. The capital is dollars coming in and how and where it gets allocated across these 3 buckets. So if you think about this, I like the rule of 3. That means in every 3 closings, a very simple wealth discipline is that production becomes the engine and your assets become the outcome. So for every 3 transactions, 3 to 5 transactions, you are going to have enough reserves. You will have enough in the investment bucket to be able to make an investment decision. Your GCI might fluctuate, but being able to say, hey, this is the amount, I'm going to put it in this bucket. It's ready for investments, and I'm committed to make at least 1 investment every single year. And this is when you're changing production into profit, right? You're turning that production into an investment. Ownership itself, right, can be transformational. So not asking, what did I earn this year? But what do I own? And how am I moving the needle into ownership? This isn't about making more money. It's about making your money work and build wealth. Our production is powerful, but ownership is transformational. And so stop asking, stop celebrating necessarily how many houses I sold and that created this much income, and start asking, how much did I own? How many doors did I add this year? Because that production creates cash, And ownership creates wealth. And the conversion from cash to wealth is the bridge we're building. And that's what we need to talk more about. So if you've got an agent, yourself, a friend that you think would benefit from them, make sure to share this episode. Our commitment and goal is to help more wealth builders across DC. So let's build equity, let's build ownership, and let's build freedom. Hit that subscribe button. Join us for the next episode as we continue on this journey to build more wealth together. Have a great week.